You've been bullish the last number of times you've been on, and you've been correct. We're looking at new all-time highs for both the S&P 500 and the NASDAQ. Do you think it's just cruise control higher to the end of the year?
Oh, I don't think that's necessarily going to be the case, Abigail, and I'm certainly getting some help from the Fed, I think, and central banks in getting that upward trajectory. But, you know, it does feel like this market is continuing to build on these positive themes, and I think it's going to be interesting to see how the envoy in China, handles that message this Monday going into the Fed announcement on Wednesday. So there are some big items next week I think the market will be focused on. But ultimately, you are seeing, again, this evolution of, again, the central banks continuing to indicate they're going to be very accommodative moving forward. And with that, the equity markets are benefiting from that because you're seeing now money searching for yield, and you're seeing it going into the equity markets. So definitely looking at the SPX.
So yesterday there was a bit of a disappointment around the ECB's Mario Draghi in terms of a little bit of a delay of the dovish policy or details around it. But do you think for the Fed, it seems so well telegraphed that they will cut rates by 25 basis points. Do you think it turns into a non-event, or what could they do that it could either surprise the upside or the downside?
Yeah, and that's a great question because, the last couple of meetings, there was concerns that basically what can he say that's going to continue to keep the upward trajectory in the market. I mean, the market's going to be disappointed no matter what he has to say, yet he was still able to navigate that. So I think it is interesting now. The market really anticipates a quarter-point cut. They've taken the 50-point basis cut out of the equation for the most part for this meeting, but I want to see what he has to say in the the post meeting as far as the press conference, and are they going to continue with another quarter-point cut or expect another quarter-point cut in September? Is this trajectory going to continue? Because the market anticipates that, and they indicate that they're going to slow down or maybe hold off in September. That would lead to some volatility, and I think that would lead to probably some volatility in equity markets where you probably see them go down initially.
Well, it'll certainly be interesting to see what does come of it, but rates have been down all year, but we finally have the financials catching up. Actually, they've been catching up for a while, but a lot of indicators now pointing to some bullish action. You're taking an options trade on the XLF. Talk to us about it.
Yeah, I am, and kind of rolling out of one, and now we're looking out in the the next month and a half or so. And I like the pattern here. The XLF now breaking above 28.5, and that's been a big resistance for the XLF, really going back to September of last year. And now with this upward trajectory, it feels like it's got a little more upside, particularly with the upgrade to the banks and Warren Buffett indicating he's increased his holdings to Bank of America today. So I like this play to the upside, and I'm looking at a call tree in August as an example. And really what that is, Abigail, is buying the 28.5 call, selling a 29 call, and selling a 29.5 call. So you buy one, sell one, sell one. And the reason I'm selling that extra call on top is to finance the call spread. But nonetheless, you get to participate to the upside. It's got a nice break even to the upside and low cost structure. Really, you're getting in intrinsic value of the XLF at 28.66 right now.